Have you ever wondered how you can keep making payments on something yet still owe more money? Probably has to do with the interest on that loan. So let's break down what that is and how it works. All right. So interest in a basic sense is essentially the price that you're paying to borrow money. So let's say you need $100. Someone's going to give it to you and say, I'm giving you 100 now, but you're going to pay me 110 later. All right. That $10 is the interest or your cost to borrow that $100. So when you have a situation where you're making payments yet you owe more money, what's likely happening is that you are making minimum payments that are below the interest that's accruing on that loan. All right, so let's say you owe $10 a year on that 100 that you borrowed, but they might say, hey, your minimum payment is $5. So you go ahead and you pay $5. You go, great, I made a payment, no worries. Well, the thing is, they're gonna take that $5 and they're essentially gonna tack it onto the loan. So now, when they're calculating your interest, instead of it being based on $100, it's on 105, all right? So you could keep making those $5 payments forever, but that interest is gonna keep growing, and it's just gonna get tacked onto the loan, all right? So you need to understand when you borrow money, what is interest, what is principal, AKA the original loan amount, and be aware of terms like it capitalized or compounding interest, because that means they're gonna tack it on the loan and more interest is gonna accrue. So you wanna make sure that you are at a minimum paying off all the interest so your loan is just not completely compounding on you and just spiraling out of control. You wanna make sure you get on top of this sooner rather than later. So stay on top of your stuff. This was helpful. Give a like and follow for more.